weekly charts of the equity markets, bond markets, and a bunch of other charts as well to determine, are we going to see lower lows in this market? Are we going to take out the June lows this week or next? We're also going to talk about the Fed's balance sheet. What did it do last week? What did they do? Did they ease? Did they add? We're going to talk about international events that can sway the markets. And we're going to talk about economic data that was released that was simply horrible. But they have one jobs report today. That's what hit the market. Remember, it's critical to remember that bad news is good news. Initially, we saw some bad news come out. Futures went up. Jobless claims came out. Stock market went down. And I ask before we get into it, Seymour, the man, there he is. I was just about to ask, and he's on the job. Awesome. Proactive. Love it. Thank you, Seymour Rivers. Thank you for being here. Devin, I am forward-looking to live. Thank you, sir. I appreciate that. Good evening, Franklin. And again, Seymour. Oh, we already went over that one. Sorry. Double dipping. There's the man, Mad Lad Talon. Welcome aboard. We have folks that are drifting in here. So after hours today, there's Larry. There he is. The man, the legend. You can feel a down week in stocks coming September the 19th and the 23rd. We'll take a look at the seasonality chart. Thank you for that. We'll take a look at it. We'll go to TrendSpider. In fact, let's bring it up so I don't forget. They are sponsoring this video. We're going to use their seasonality software to see, is Larry on a historical basis accurate in his forecast? We'll check it out. Thanks, Larry. What else do we have? I think that's good. All right, so FedEx came out after hours, and some may think that this is going to be bearish for the market. It's not. It's going to be bullish for the market. I'll tell you why in a moment. FedEx plunges to two-year lows after withdrawing earnings guidance. Never, ever good. When you put forth earnings guidance, which is below expectations, and you withdraw it, that means you don't know what's happening. The floor is falling out of the economy globally. In a surprise pre-announcement, FedEx said it's withdrawing its fiscal 2023 earnings forecast as a result of the preliminary Q1 financial performance and expectations for a continued volatile environment. FedEx results were particularly impacted by macroeconomics weakness in Asia. That is the manufacturing hub of the world. And service challenges in Europe. There's no energy. You have Tesla that has now abandoned their big gigawatt factory over in Germany. Q1 financial results. EPS $3.44 versus, wow, oh my God, versus $5.10. FedEx preliminary Q1 revenues, 23.2, not horrible. You don't want to see miss on revenues. EPS can be manipulated. FedEx preliminary Q1 adjusted operating income, that's a big hit. Actual 1.23 versus 1.74. Wow. They're going to be going for layoffs. Additionally, the firm said it was moving to cutting costs. While the performance is disappointing, we are aggressively accelerating cost reduction efforts. That's always layoffs. And evaluating additional measures to enhance productivity, robotics, reduce variable costs, layoffs, and implement structural cost initiatives. These efforts are aligned with the strategy we outlined in June, and I remain confident in achieving our fiscal year 2025. Wow, they're going out to 2025. Wow. Global volumes declined as macroeconomic trends significantly worsened later in the quarter, both internationally and in the U.S. Let's take a look at the chart. Wow. Remember, this is definitely not a recession. Incredible. All right, let's go to the chart of FedEx after hours, and we'll decide about where we might see some support. Oh my God, some support levels here. See if there's any other news. I didn't even know they were reporting today. Okay. Wow. Okay. So the shares closed out the day at 204.87 last. Wow. Jesus, Mary and Joseph. This is a 3 standard deviation move on FedEx after hours. Last tick 171 spot 87. Let's bring up the chart to see where we may be going here moving forward on FedEx, because I know there's going to be folks out there that are long and wondering where the heck is the floor going to be. Frankly, I'm going to hold my comments until after I do some analysis here. So we're at 171. We have broken monthly support, and we are down here at this volume shelf in the after hours session. I kind of like this support level, to be honest with you. Let's go to a weekly chart. It's not obviously the price is not reflective of the after hours price action. Here's that support level. Here's where we close today. You are here. Wait till you see the candlestick that opens up tomorrow. I kind of like the support level. What's the last tick? We're right there. We're right there at that support level. Let's go to a daily chart. Not that this matters much. It does matter. We have a support level below. We're going to pierce this lower band of support tomorrow. What I think the trade is here on FedEx is after the first hour tomorrow on FedEx. If we do not break 171, if we hold that support level after the first hour of trade, I think you're going to see money move into FedEx. And where they're probably going to rally it up to is right here. This, what should have been support, is now going to act as resistance. So they could rally this up to, let's say, 188 per share on FedEx. That would make for a nice trade. The play here, I think the safe bet, especially in this market environment, is to put on a bull call spread. That is the purchase of a deep in the money call option, the simultaneous sale of a deep out of the money option. I would go greater than 45 days, your call though. But that's the play here. That's the shot. You're using minimal capital and you're going to get a nice return on that capital. So FedEx looking good as a trade here at monthly support. It's got to hold 171 by 10:30 a.m. Eastern Standard Time tomorrow. FedEx. Okay, let's talk about the headlines. I read this this article, and I've seen Barry Sternlicht before. He seems like an intelligent guy, and this resonates with me. This first part here, because I've always warned about the reasons why the Federal Reserve will not raise interest rates aggressively, is that they can't. It's because if they ever were to say normalize the Fed funds rate the payment that we would have to make on our debt would be the equivalent of the national defense budget. So I was fascinated by the fact that he used the same analogy here today. Take a listen, and Barry Sternlicht.
This will be the 5th rate rise this year.
Let me turn this up.
This will be the 5th rate rise this year. It's the steepest increase in rates in history, certainly since Volcker. But the background of the country today is so different than it was when Paul Volcker was chairman. We have $30 trillion of debt, the nation. The increase 1 point, if he goes 1 point on the next week, that's $300 billion of incremental interest expense. $300 billion is half of the defense budget of the United States. It's a lot of money. So the 2 or 3 rates he's done is almost $1 trillion of incremental interest expense. Now, not all our debt is floating, but a significant portion. We do continue to have to feed this deficit by issuing bonds, and it's at ever higher interest rates. The economy, if you look anywhere, is already slowing. And if you look at the signs, like I have a slide on consumer confidence, if they could put it up. I mean, consumer confidence is terrible. And where will that show up? And it will show up at Christmas. At Christmas, if you survey the consumer, half of the people will spend less this year on goods than they did last year. 20% of people will spend 50% less than they did last year.
So that is not going to bode well for retail, in particular the discretionary names. We're going to go over the weekly charts of the major averages, including the consumer staples sector and the discretionary names in a moment. So add to that, there's an article that came out today about how while consumer confidence is dropping like a rock, consumers continue to pile on more debt. And what are they spending it on? The grocery store. The grocery store. They're going in debt for food, folks. And what happens? What happens when these banks start cutting your limits? As a matter of fact, I wanted to save it. I forgot I even had a Home Depot card. I must have opened it up. They wanted to give me a discount on something. I opened up the card, paid it off. I never carry a balance. So I get a letter in the mail that they're dropping my credit limit. This is about a month ago now. They're dropping my credit limit down from whatever it was. I have no idea what it was, down to $5,000. I was like, that's good. At least I have $5,000. I have no idea why they dropped me down, only because I believe that the economy is fractured. And what this gentleman was just saying about the national defense budget, or the current payment on our national debt being half the size of the defense budget, I think he's low on that number. I think it's more like $400 billion. The national defense budget is like over $800 billion. They can't keep raising rates like this. We are already bankrupt, and we need to borrow money to roll over our debt at a higher interest rate. It's insanity. The only way out of this is they must stop spending. They must stop spending, and they won't. They won't do that. That's their power. That's their power, and they won't let it go. So, moving on to the other headlines I wanted to get to. The Atlanta Federal Reserve has cut yet again. The Q3, Q3 GDP forecast, which is coming to a close now up only a half percentage point. This is going negative. They revise these reports constantly. So here's the consensus of the top 10 analysts way down here. And the Atlanta Federal Reserve is still just positive. You know, this is a political number. If they would have had a negative print on this GDP forecast, the White House would have been on the phone with them saying, what are you doing right here? So they're bailing out the White House. We are in serious trouble here. We are in recession. I have no doubt about it. I'll probably get demonetized for that. So, well, be that as it may. Today, industrial production unexpectedly dropped in August. Frank, I expected a rally today. I expected stocks to rally on the news. The reason why they didn't was because of, where is it? I know I had it. The jobs data. I don't know what I did with it. I don't know what I did. I thought I had it up here. Oh, here we go. Non-seasonally adjusted initial jobs claims crashed to 53-year lows. Do you really believe that? Do you really believe that? You have companies that are laying off, and we crashed to 53-year lows. I'm not buying that. I believe that as much as I believe the jobless claims that came out last month or earlier in the month, and you had the establishment survey came out with a historic beat on job numbers, which is positive. However, when you do the household survey, that came in at a negative number. But of course, they go with the establishment survey because the media is not the media. They are the lapdog propagandists for the administration. Core retail sales disappoint. Another reason why I expected a rally today, and it wasn't to be. The jobs data took the market down. I'll be interested in seeing what the futures are doing now in light of the FedEx news, because that is a market mover. Have no doubt about it. Let's see how we're still holding that 171 mark after hours, but after hours session doesn't mean much. What matters is that first hour of trade. If there is no counter trend rally off a 171, you got to avoid the trade. It's just going to be no uptick all day long tomorrow. Watch for a counter trend rally. If it breaks, if you enter the trade, you got to use a stop loss just below the lows of the days, because if they take out that low, it's going a lot lower. Remember, big institutions can't dump right now. There's just not enough liquidity. Tomorrow, there'll be more liquidity. That's when you're going to see the whales move in and dump shares. Take a look at the volume on the news. This is a 30-minute chart. Take a look at the volume. This is not massive volume on a relative basis. I mean, we've seen higher volume bars in the past few days. So don't get lured into a false sense of security that we're holding 171 now. I question whether or not we're going to be able to do it. If they take it down below that read tomorrow morning, I'll wait for a close back above it. If they close it back above 171, we get long of FedEx. Now let's take a look at the futures action. E-minis, they are down over a 0.5 percentage point. VIX is rising. You have the VIX down here. I have no idea why the dollar is rallying on this news. No idea. Yields are not breaking out. They are holding steady. They're not falling, though. You would imagine that yields would fall on this news. It's not happening. The dollar's strengthening. So the way I interpret this, with the VIX being up, futures being down, the market believes that the Federal Reserve is going to be aggressive in their next meeting. 3/4 basis point. If we get that, you'll probably get a rally in the market. If we get a full percentage point, I think that they break the back of the market, at least in the short term, unless their forward-looking guidance bails the market out. Remember, these rate cuts, they really haven't hit the economy yet. It takes 6 to 8 months for the first rate hike to hit the economy. Let's check out the NASDAQ. NASDAQ down over 0.75 basis point. VIX is continuing to trend up higher. Let's see what gold is doing. Gold is down another 0.25 percentage point. Let's check in with the euro and the yen. Euro has gapped up on the news. This is why I don't understand why the US dollar is holding this support level at current. Yeah, the euro up today along with the dollar. The euro continues to strengthen. Dollar is still strong. The yen is gapping up on the news. What's keeping the dollar up? I'm not quite sure. I am not sure. The reason why I'm so adamant in my comments about the strength of the US dollar, unless my slider is not slitted over properly. Hold on one second, folks. Sometimes it's no, this is right. So it's very strange, and this is unsustainable. To have the euro and the yen trading up against the dollar is really unheard of. Why? The Dixie, the $ DXY trades inversely of the euro. The euro makes up 55% of that dollar basket. The second largest component of the dollar basket trading against the dollar is the yen. Those two trading up and the dollar trading up at the same time doesn't make sense. This is not going to last. I think that we're going to see a break in the US dollar fairly soon. And if you buy into that argument that I'm laying out for you, we're going to go over some charts in a moment. And I know I told this to members the other night on, I think it was Monday or Tuesday night. I said, the charts are not bearing me out. They're saying the dollar wants to go higher. I'm saying that it fails. So what you want to take a look at is gold. It looks horrible right now, but it's always darkest before the dawn. So gold is ugly. Why? Because the dollar continues to press up higher, forcing down the price of gold. If the Federal Reserve even implies for a second that they're going to pause and be data dependent moving forward on rate hikes, you're going to see the dollar tank. You're going to see gold, commodities rip through the ceiling because nobody with a half a brain is going to believe that they have cured the ills of inflation. Nobody. Let's go to some comments. Yoga Mac, the man, the legend, driving but got you in my ear. Thank you, sir. Love your ability to multitask and, of course, be engaged with the community. Folks, yeah, thanks. Yoga Mac, like and subscribe, please. Don't forget, it helps me out with the YouTube algorithm. I would like to be above, 4,000 subscribers. I look at these kids, and they have, unless they pay for these subscribers, I don't think they do, all of them, 30,000, 100,000, 200,000 followers. I can't get past 4,000. I don't know. Maybe I got to wear a clown wig or something. John Yates, UVXY. Is that a VIX volatility call? ETF? It's quad witching tomorrow, folks. That's futures, commodities, equities, all expiring tomorrow. I think it's about $3 trillion in notional value. Thanks for the reminder, John. Don't worry. Yeah, CBDCs, there's a digital dollar, digital tokens, programmable money coming our way. It's coming, folks. I agree. They're going to trash this market. They are going to trash the market. Dollar will win. Okay. Market says the dollar is correct. All right. So I'll challenge you there. I will challenge. I'm not going to argue the fact that the dollar is saying the market is saying the dollar is correct. But riddle me this, Batman. Riddle me this. How is the dollar up? With the euro up, bigly, along with the yen. Unless we're not trading here. Maybe that's what it is. Maybe they're not trading it right now. But it looks up to date to me. Up along with the yen. Let's drill down. See if it's trading. What's 1,800 hours? Hold on. Get on my military time clock. $1,800 hours. 6 p.m. It's trading. Okay, let's go back. What do we got? Gold Corp? No, I didn't bring up Gold Corp. Jeff, gold is making you sad. Jesus Christ, I'm crying in my pillow every night. Thank God for covered calls. I'm in a farm country that Bill Gates doesn't own. Good for you. Wise move. You shouldn't have hundreds of thousands. I don't know what that means, but okay. Wait a minute. The market is saying they want to go up. Now you're questioning the markets? Can't have it both ways. Bam, zap, Batman. Yeah. Should I invest in gold stock? I am, but stay small, nibble, nibble, nibble. Add aggressively on a reversal bar, weekly reversal bar. Thanks, John. Been itching to buy Nugget. I bought some early in the week. It's kind of didn't do well today, but we have covered calls out there. We have actually I tried to book profits on the covered calls today. We sold the 30-50 strikes expiring October 7th. I tried to close them out for 35 cents, but then Nugget rallied into the close this evening, and I couldn't get filled. But it's dropping the after-hour session. I could probably close that out tomorrow. We'll go over your request, Yoga Mac. Okay. Dollar's not moving here at all. I don't think this is trading. Last tick was 1805. This can't be trading. It can't be trading. All right. Maybe it's a late settlement. I'm not sure, but this can't be trading right now. FedEx catching a bid here. Last tick 172.35. I would not buy right now. Wait until after that first hour of trade tomorrow. See if it holds 171. I think when gold gets some mojo, look at I agree because when the dollar's got to drop. I mean, I think we could agree that absent a geopolitical event, meaning a crisis of some sort or a whatever, war is usually what drives gold and the dollar up simultaneously, but that correlation does not last. For a sustained rally in gold, you need a drop in the US dollar. If anybody's going to fight that correlation, you're going to go broke. So you got to respect the inverse correlation of the two. If you do, you'll do great. And I do believe once the dollar breaks, I'll put it to you this way. Let's go to this chart. Let's go over the monthly charts, I should say, weekly chart and the monthly chart. Here's the dollar on a weekly time frame. Folks, this is an extremely bullish setup here. If the dollar does not follow through next week on this bullish key reversal bar, folks, if you're not familiar with the terminology of the candlestick patterns, 5-part video tutorial below in the description area, free. It's a 5-part video tutorial, free. Take advantage of it. So this is one of my favorite candlestick patterns, a bullish key reversal bar. We were lower on the week. We're trading just off the highs of the session today, and it should move up higher. One trading day left to go, though. A lot can happen here. So if we have the euro and the yen moving up, I suspect you're going to see a lot of damage done tomorrow to the U.S. dollar. We'll check in with the dollar before we shut down tonight. If somebody could remind me, like 6.55, I'd really appreciate it if you could do that. That'd be wonderful. Yeah, so we're on the same page, John. Thank you. Talon, Bob, do you ever buy futures contracts on gold? No, I have never done that. No. GC seems like it would fit your style with a stop loss. I like the physical gold personally. I like to touch it, have it. I want to be able to pay the border guards, if you know what I mean. So that's why I want it. So that's my strategy there. I prefer to have the the uh, the gold mining stocks, the silver mining stocks. They generally outpace gold to the upside by 2 or 3 times when you get a big gold bull market. So those I like to sell premium on, as you know, Talon. We'd like to sell covered calls, deep out of the money covered calls, and we generate cash flow off of them. So that's the strategy with that we're using right now. And we also like emerging markets. All right, so the dollar, if you take a look at the MACD monthly time frame, we are very, very long in the tooth. And if you look at the histogram, we are losing momentum. Add to that, watch this. Take a look at this. You're seeing the MACD histogram putting in lower highs, yet we're putting in higher highs on the US dollar. That's a bearish divergence. And if you take a look at the ADX, this is the momentum indicator. It shows the strength of the trend. You can see that we are possibly flashing a double top here on the signal line, and we already have a double top. We're just waiting for a breakdown to lower lows on the ADX green. You have higher lows and higher highs on ADX red. Things are changing beneath the surface on the US dollar. And when you take a look at the Japanese yen monthly chart, I spoke about this earlier in the week. We have RSI, it was below 17 on Monday. Now it's above 17. We are coming off the lows of the week. I think there's a trade here to be had on the yen to the long side. I think it was down today. Yeah, it reversed off of its highs today. You had a nice bullish reversal bar yesterday. They tried to break it out today. No bueno. Oh, that's a euro. Sorry, folks. Here's the daily chart of the yen. Yeah, it was down today. Now, the euro is very significant. When you take a look at the euro, and you may be saying, a lot of you may be out there saying, why the hell is this guy talking about dollars and euros and yens when it comes down to gold? If you want to buy gold, if you want to buy silver, if you want to buy the gold mining stocks and the silver mining stocks, you must know where the dollar is going. If the dollar is going up, you need to stay small, nibble, nibble, nibble. If the dollar is dropping like a rock, then you go all in on the gold stocks, mining stocks, etc. So right now, the euro has last week flashed a bullish key reversal bar. We were lower, closed higher. This week, they tried to break it out. It reversed on the week. RSI has already broken out. I know it's hard to see. Let me see if I could magnify this a bit. And I think that we're doing a retest of the breakout point. It's hard to see. We broke out last week. Now we're pulling back on the week, and we're retesting what was resistance could now act as support. We'll see if it does tomorrow. And what did gold do today? Well, on the week anyway, we're going over the weekly charts. Bearish key reversal bar on the week. This is horrible, horrible price action. What will salvage the week for gold? What will salvage the week for gold is if we manage to rally back with only one trading day left to go. I just refreshed this. One trading day left to go. And you can see that we are now testing the monthly lower band of support as well as the rising 200 period moving average. This is a horrible, horrible chart. We need a rally and we need it strong. At a bare minimum, for me to get at all bullish on gold, and I have been bearish on gold for the past several months, we need a rally to close back above 1,700 the ounce, and ideally a massive rally up to 1,725. We're going to be watching the dollar very, very closely. To get a close above 17.25 tomorrow would take a massive move lower on the US dollar. To get above 1700, definitely doable. That will show that we have support at the rising 200 period moving average on a weekly time frame, as well as support at 1671 per ounce on gold. So if you're looking to stock up on gold or open up a new position, watch how we close out the business day tomorrow. If we close above 1700, we'll probably have the bottom in, because we are at the lows of the trading range, a multi-year trading range on the price of gold. How much time do we have here? 6:37. Let's go over a few weekly charts. Yields. I warned about this. I've been pounding the table on the 10-year yield and technology stocks. Folks, if the 10-year yield continues to press up higher, you got to avoid technology stocks. You have to avoid technology stocks. Gold can continue up higher on rising yields. It can't continue up higher with rising yields and a US dollar that is gaining strength. So 10-year, when we saw this, we saw rising yields and rising gold back in the 1970s into the early 1980s when Volcker was fighting inflation. So yields are broken out in a very big way this week. We have put in new weekly higher highs. Yields with one trading day left to go appear as though they're going to move up higher. As for the price of the bonds, the 20-year bond, we are off the lows of the week while just off the highs of the week on yields. Very odd happening there. You would expect that we would be near the lows of the week on bonds, but something's amiss. Something's not right. And when you take a look at a daily chart of the TLT, daily chart TLT, go. We've had a couple of back-to-back up days while yields have headed up higher as well. Today was a down day, but kind of like a doji star formation, a sign of indecision. My screen shows PMO breakout on 4-hour chart of UUP. If you want to drop the link in, we'll open it up, Larry. You already have the chart up. If you can you link to it or no? And I don't doubt it. I don't doubt a breakout on the gold 4-hour chart. The question is, does it hold it? Looks like gold will go down to one. No. Wise guy. If that happens, I'll be making teeth fillings with the gold I have. What else do we want to take a look at here? VIX. Weekly chart. You know, it's been a weak this week, yet VIX is it's well off the highs of the week, and we're at the lows of the week. Let's take a look at the daily action here. An up day, but man, this is not a bullish setup. It looks like it could certainly continue up higher, but you would expect a lot stronger action here, because when you take a look at the S&P 500, which the VIX is supposed to trade inversely of, take care, John. Folks, we're nearing an outside reversal bar on the S&P 500, depending upon what happens tomorrow. Yet the VIX is off the highs of the week. What's that all about? Very strange going on with the VIX relative to the S&P 500. Not just this week. It's been going on for a couple of months now. Frankly, since June. The trip Qs. We covered our shorts on the Qs earlier in the week. I may need to revisit that. We'll see how we're poised to close out the week. We may need to put on a hedge going into next week if we close out the week much lower. Let's go to a daily chart. Daily chart. We have broken support. We're holding another 290. That was my price target last week for the Qs. We've hit it now, but I think we could head down to 285. I think the best thing that could happen for this market is that they'll use the excuse of FedEx as a reason to sell this market off tomorrow morning. But if they close it up tomorrow, that will be a very bullish event. So one of the reasons you may be asking, why would they close the market up? A lot of bad economic data. Well, bad economic data is good for the market. It forces the Fed's hands to pivot. Another reason why, and I didn't go over this, let's go back to it, is that when you take a look at the Federal Reserve's balance sheet this past week, remember, they were supposed to be aggressively dropping off the balance sheet June. That never happened. It was drip, drip, drip. Then came July. Drip, drip, drip. That it never came. A little bit of directional change to the downside. Then September, they were serious. Their last Fed meeting, they're serious. September comes, we are going to drop that balance sheet like you've never seen before. Okay, it's the middle of the month. What have they done? Oh, they rose it last week. It rose. And in fact, if you take a crayon out and you draw the highs on this chart, my well-trained eye can tell that we have broken out to new higher highs on the Federal Reserve's balance sheet. Son of a bitch. Family-friendly show. I apologize for that. They broke it out. If they get the Fed's balance sheet back above $8,851,436,000 or $1 million, sorry, you're going to see a market rally. You're going to see a stock market rally. Crazy. All right, let's do some chart requests. What do we got tonight? Rivian for Yoga Mac. Did somebody request Gold Corp? Let's do this. Let me take some notes. RIVN, Yoga Mac. And what do we have in the members area? We have a couple that we need to go over for members. All right. I'm going through the notes to see who asked for what. All right. So right now we just have Rivian and a couple in the members area that have been requested. Let's do it. Let's go with the monthly chart first. Yeah, that's right. This is not a lot of data here. Let's go to the weekly chart. The monthly chart for, I'm going to go back to that. Looks pretty solid. This is a solid chart. I mean, you look at the market is down big, yet Rivian is up. This is a trade. We've broken out on in fact, we broke out last week. We got the retest of the breakout point this week. We have now rallied through resistance. On the day today, we had a doji star formation down slightly on the session. So what we did is we broke out, pulled back, did a retest today. This is a bullish chart. This is a bullish chart. And this is not like an Amazon or an Apple. Those are they already ran. They already had their bull market. In the next bull market, you got to start looking for your next Teslas and Amazons, and you got to wonder, could this be one of them? I don't know enough about the company. I'm just throwing it out there. May not be. I know there's a lot of allegations about the company, but hell, there's been a lot of allegations about Tesla too. So interesting. Let's go to some members request. O'Reilly Auto Parts. This is one I haven't gone over in a while. Not good. Monthly chart, we have a bearish key reversal. We've broken down to new lower lows. Folks, if you want me to go over your charts, just drop the symbol in the chat box. Usually I'm getting hit with a lot of them. Oh, SoFi. Yeah, we'll go over SoFi next. Bearish reversal bar on the month. Not looking good here on O'Reilly. I hate retail. O'Reilly may do less worse because people are going to be keeping their cars. They're going to need parts. We have a breakdown on the week. We were holding support. We failed. This is the second time we've broken back down below the upper line in green. That's very bearish. We are holding the lower band of daily support. If it breaks below the support level, I would use that as my stop and exit the trade if you decide to swing trade this to the long side. The next chart up is SoFi. Now, I got a personal peeve with SoFi. I dollar cost average, very small amount into Bitcoin every single week. I'm talking small amount of money. And you can't back that crypto off to a wallet. They make you keep it on the exchange. So that ticks me off because I don't trust the exchanges, because if they go belly up, they can seize your Bitcoin, or the government could seize your Bitcoin. I don't want that. I want it in my own electronic wallet. So I'm not going to be sticking with SoFi. So they're going to lose me as a customer for that very reason, because they cannot guarantee the security of my crypto. That's a big problem. So SoFi, that's my gripe. Let's talk about the chart. Monthly chart of SoFi is looking pretty good. A lot of damage has been done here. We have a potential for a higher low being put in. I'm sure it's going to be more magnified on a weekly chart. We'll go to that in a second. But as you could see here by this VWAP in blue, volume weighted moving average, they're connecting the lows, and we're putting in a higher low monthly chart. Remember, though, we have a half a month in September left to go. A lot can happen. Weekly view. So what we're doing here, here's that more magnified view of the chart. We have a higher low, and we have broken out on a weekly time frame. To me, with the markets being this weak, and you have a high beta name like this that's up, the bottom is in here on SoFi. So I think that SoFi is going up. Would I be an investor? No, not until they fix my ability to take my crypto and back it off into a wallet, pissing me off. Daily chart up today in a weak market. What can I say? I mean, I could dislike SoFi as a company all I want, but the chart is saying it's going up. Sean, CFVI. I do not believe I've ever heard of this company. Let's visit it. CFVI. Whoa, what the heck happened here? Whoa. Earnings today? What happened today news-wise, please? Oh, it's a SPAC. Is this the one that was merging with DWAC? Or is that a different one? Am I thinking of something else? CFVI monthly chart. It's above a resistance level at current, but you can see there are a ton of sellers above. You saw it back here, back here, back here, and now you're seeing it again. You're seeing distribution. Weekly chart. This is a very bearish setup. We had higher weekly highs. They reversed it to close lower. No new weekly lower lows. I'm not seeing the reason here, unless, you know, DWAC I bought when nobody wanted it. They didn't think anything about it. I think it was the day it first came public, and I made a couple of times on that SPAC. So these are really news and event driven vehicles. Daily chart, horrible price action here. What were we down today? Nearly 18%. Oh, this is the SPAC for Rumble. Oh, I was unaware because Rumble has their own symbol, RMBL. Oh, that's Rumble On. Maybe that's a different company. Okay. What was that symbol again? CFVI. So I happen to like Rumble as a company. Their business is not just video. It's they're going to be doing hosting. They're going to make a lot of money, that company. I happen to like Rumble. They have good management. So maybe this is an opportunity to open a position. You should sell out if it's a SPAC. SPACs never go out. No, that's not true. DWAC, I mean, I bought that day one. DWAC. I just held my nose and bought. And that did really, really well. Here. This is when not when the SPAC was launched. When Truth Social launched, that's when I bought it. And that was here. And we made a killing on this. Okay. And you may get it. You may get the strong dip. You're welcome, Sean. It goes Rumble on Monday. Okay, good information. I was unaware of that. Thank you for that. DWC didn't go through merger yet? Yes, I'm aware of that. Disney. Disney, I don't like. I don't like their management. I think they're morons. The policies they push with I'm not even going to get into it. That woke agenda is so anti-family. It's ridiculous. And this rally is probably the peak. I think that will probably pull back. You know, do we break down to new lower lows? I don't know. All I can say at this point in time, what the chart is saying is that you're going to get a pullback. What you need to watch for if you're wanting to buy this stock is this. Do we put in a higher low? Or do we put in a double bottom setup and use a stop right below the July lows? Weekly chart. Folks, we're using TrendSpider automated technical analysis. I get a 35% discount code. I'm giving it to you. Use the link below. We have a breakdown weekly time frame. Daily view. I don't see any value in purchasing these shares at current. I think it goes lower. I think we're hitting a ceiling, and we're probably going to back off further. So I would avoid. And another thing with Disney You take a look at Netflix today. We have for disclosure purposes, we have a neutral position. It's called a Strangle video below, explainer video, an options position in Netflix. We're not bullish or bearish. I don't care what it does. I just don't want it to move because we're options sellers. It was up today. It was up today. Disney was down. Avoid it. Ah, my main man, Larry. Thank you, sir. I appreciate it. You're a gentleman, as always. Men's. You can't do that to me live, man. That's so wrong. I got to read it. I got to pay man respect. Men's underwear index continues to trend down, signaling economic. I would have expected you to put dump in there versus slump, but okay. We'll continue. Underwear sales are off, discretionary. I'm going to type in that symbol. Oh, that was too good. I want to see. He's got me pulling it up. It's a BlackRock fund. You're too funny, man. Thanks, Larry. Where is Yoga Mac? You're welcome, Yoga Mac. Didn't you have another one? Oh, RBLX. We'll leave it off with RBLX. So I'm going to go to the dollar. Roblox. Folks, if you're wondering the value of automated trend lines, here, take them off, put them on. Within a fraction of a second, I knew the strategy with this stock because of this resistance level. I haven't looked at the stock since the last time probably Yoga Mac asked for me to look at it. We are consolidating here along this volume-weighted moving average at a 20-period time frame. We're consolidating. We are holding it. Watch for a breakout on Roblox. We need to first go back before we pull the trigger on the trade and see what the trend is. I'm not correcting errors tonight with running low on time. Let's take a look at the macro chart monthly view. Hell, folks, we're up on the month. What can you say here? When you have, and this is a great point here. Rivian, Roblox are up on the month, and these are high spec names, yet they're up on the month, and the stock market is down. That's relative strength. So Roblox up, looking good on a monthly time frame, putting in higher lows. Good stuff. Weekly view. We are breaking out on a weekly chart. My trained eye. Possibly breaking out. Close, but no cigar quite yet. Possibly breaking out. One trading day left to go. Let's go to, like hemlines, MUI is a much watch market. I love it. I love it. Awesome. All right. So let's check out the dollar, which would normally be trading on a Sunday night. Let's see what's going on here. It's not trading. This hasn't moved one tick. Let's check back in with the euro and the yen, see if they're holding those gains. And the yen is. Euro's holding gains. Let's see if gold is responding. It's not. It's down a third of a percentage point. I think gold rallies tomorrow morning. I think they knock this market down tomorrow morning, and they quite possibly reverse it. VIX is stalled out a little bit. Yields are now dropping. Yields are now moving lower on the session. I just brought up another chart of the dollar. Same deal. No glitch there. All right, folks. Folks, thank you for being here. I'm humbled for you spending your time with me. I very much appreciate it. If you could smash the like button, subscribe to the channel, tell a friend, and everybody have a profitable trading day tomorrow. Have an awesome weekend. Thank you for being here. Have a great night. Be well.